Hello everyone, welcome to my YouTube video. I'm Yessy Anathasya Manalu with NPM 254122052. This time we will learn about what the basic accounting equation is. So enjoy watching this education video. Basic principles of accounting. Accounting is a systematic process that involves recording, classifying, summarizing and reporting financial transactions of an economic entity to produce useful information for decision-making. According to the American Accounting Association (AAA), accounting is the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of that information. Thus, accounting is not merely a record-keeping activity, but also a financial information system that supports managerial and strategic decision-making. The primary objective of accounting is to provide relevant, reliable, and understandable financial information to interested parties, both internal and external. Accounting information helps management evaluate company performance, plan financial strategies, and control economic activities. Additionally, accounting plays a vital role in maintaining accountability and financial transparency, which are essential for building trust among investors, creditors, and the public. The main functions of accounting include recording financial transactions chronologically, classifying data into appropriate accounts, summarizing information in financial statements, reporting the results of economic activities, and analyzing financial conditions to support decision-making. The users of accounting information can be divided into two categories: internal users, such as management, owners, and employees, and external users, such as investors, creditors, government agencies, and the general public. At the core of all accounting activities lies the basic accounting equation, expressed as assets equals liabilities plus equity. This equation shows that the resources owned by a company, assets, are financed either by creditors, liabilities, or by the owner's equity. Assets include resources such as cash, receivables, and equipment. Liabilities represent the company's obligations to external parties, such as accounts payable or bank loans, while equity represents the owner's residual interest in the company's assets after all liabilities are settled. In preparing financial statements, accounting follows a sequence of steps known as the accounting cycle. This process begins with identifying and analyzing transactions, recording them in the journal, posting to the ledger, preparing a trial balance, making adjusting entries, and preparing adjusted trial balances. Next, financial statements are compiled, followed by closing entries to close temporary accounts such as revenues and expenses. In some cases, reversing entries may be prepared at the beginning of the next accounting period. The main financial statements produced by accounting include the income statement, statement of changes in equity, balance sheet, cash flow statement, and notes to the financial statements. The income statement shows the company's financial performance over a specific period. The statement of changes in equity explains changes in the owner's capital. The balance sheet presents the company's financial position at a given date. The cash flow statement shows cash inflows and outflows, and the notes provide additional explanations to support and clarify the figures reported in the main statements. Accounting has several branches, each developed to meet specific information needs. These branches include financial accounting, managerial accounting, cost accounting, tax accounting, governmental accounting, and auditing. Although each branch has its own focus and purpose, all adhere to the same fundamental accounting principles. These principles include the entity concept, going concern, historical cost, revenue recognition, time period consistency, and full disclosure. These serve as guidelines for accountants to ensure that financial statements reflect the company's true financial condition and are comparable across different periods. In summary, the basic principles of accounting form the foundation for understanding how an organization's financial information is managed. By mastering accounting concepts, principles, and the accounting cycle, individuals can accurately assess an entity's financial health, make sound economic decisions, and maintain accountability and transparency in all financial activities. That concludes the discussion on the basic accounting equation. Thank you for listening and watching my video. See you in the next learning video. Bye bye.